Welcome, welcome, welcome. I still have like my mic settings on from the podcast, so I don't know if it's too quiet or too loud. Maybe this is better. It should be fine. But as you just heard, podcast, our first episode dropped yesterday. Go check it out. Not true. Sorry, I was looking down over here. Also, shout out to Zeke. Trading Addicts podcast. Thank you for the feedback. I hope you have watched it. If you have not, I just put the link in the chat. Go watch that after the stream. If you really want to, leave the stream and go watch that. I mean, I just really want all of you to see that. So, yeah, we went for like an hour and a half. We're going to be doing weekly episodes. It's me, it's Zeke, it's Keanu, it's Jordan, it's Candlestick, Nick. We got the whole entire squad. We got Garrity. It's amazing. I just said Candlestick, Nick. I'm also thinking of like the webinar. There's so many different things going on. Like, it's crazy. I'm really trying my best. I know like the last few months, the last year I was really inactive, and now I'm trying to start everything back up again. So I really do appreciate the support. Yeah, I really don't know what else to say today. The market was very good in the morning, and then it pulled back. It was kind of like autopilot and reverse autopilot. Absolute insanity. Tomorrow is going to be a very critical day. Let's get into that. Let's head over to the charts. We're going to start off with crypto, then other markets, then stocks. All right. Not bad. Not bad for crypto right now. Bitcoin is starting to curl up. It is getting closer to 17.5K. That is a pretty important resistance level. With a higher low, I think this is looking pretty decent. If we go over to the weekly chart on Bitcoin, it looks a little bit like a bear flag. You have a little hidden bearish divergence. So really to invalidate that stuff, what I would hope for is like just a strong move above that level. This kind of level over here. I would look for a strong move above that level with rising volume, okay? We've been seeing decrease in volume week after week after week on Bitcoin, and I would like to see some rising volume with a break above that level. That would give me some more confidence, despite this little very shy weekly falling wedge breakout at Scott going on. If we go over to Ethereum, I talked about how that broke back above this critical zone. Good volume. This is the type of move that I want to see on Bitcoin now. Ethereum's already doing it. It's actually getting very close to testing a breakout of this descending broadening wedge. So if it can clear that, also clear the 200-day moving average, that yellow line just above, that sets you up pretty nicely, I think. Of course, you got to get some more confirmation. But yeah, crypto is starting to curl up. I think that looks pretty good from a technical standpoint after weeks of consolidation. I already see it in the chat from Zeke and Turts. You're already seeing some crypto stocks do well. Coinbase was up 15% today. By the way, if I'm talking quickly, it's an early stream, so we're not drinking tea, we're drinking coffee, okay? All right, Coinbase up 15% today. Very quick, like I just need to slow down, okay? Caffeine's really hitting right now. Very great move after a bullish hammer last Friday, okay? Got a gap up and then you just ran today. Resistance is around 41, which was your previous all-time lows, and support. This is your highest daily candle close since December 14th. And on the 4-hour, that wedge I talked about like 2 weeks ago, you actually broke out of it, which we already talked about on the stream. And you spent the last few days back testing it before this big move today, up 15%. Mara was up 20% today. That was a very nice move. I don't really know what's going on here chart-wise. Let me kind of redraw this. Maybe you have a harmonic going on too. Nothing textbook, but you got that weird M shape. And I don't know, it's like you had like this wedge over here. You broke out of it a while ago. And honestly, it's been going up since the wedge breakout. It's not like this is anything new either. Like you had the wedge breakout, and it's been already on a nice move since that breakout, up about 55%. This is the thing with a lot of these stocks that got beaten down. You zoom out and this little move looks like nothing. But that's a 50% gain. And right now it's getting close to testing these lows from last July as resistance. It actually perfectly did already. Look at that. That's technical analysis for you. This exact low was used as your exact resistance and high of day today. So that's your next critical level. If it does pull back, the support I've got for Mars around 4.33 from these highs over here, and then kind of where these two candles had a low of day in the middle of December. So crypto stocks, Not too bad. Let's take a look at RIOT, see if that joined the party today. It did, up 14%. This one's also been running. It had like a nice little wedge right over here, and then you had some classic bullish divergence on the MACD, but not on the RSI. And it's gotten back above 406, which is the lows from last July, even from last November. So quick turnaround. Look at this level, even dating back to like 2020 was resistance before. That's pretty nice. 2019, 2018, like this is a huge level, 406. Very big level, it's back above it. Nice move there. Of course, we're looking at this a little bit like after the fact. They've already been running. I'm just mentioning it on the stream. So let's move into other markets now. First of all, the US 10-year, that hidden bearish divergence rejection of resistance is playing out together. That 3.5% level I was talking about, you're testing it right now. It was highs from last June, lows from very recently at the end of this wedge in December, and now you are retesting the level. This is the part to me which starts to look like this. A potential bullish bat, but it's in the bearish point of the bullish bat. And if it breaks under this 3.5 support with confirmation, then you could potentially get the bat action magnet move, which would imply breaking under this support level could take you down to complete the bullish bat. But you would obviously sell off first, which would be a short trade. I'm not telling anybody to short this. I'm not too caught up with how everything is fundamentally affecting bonds right now. But just from a technical standpoint, if that level does break, this could be what's next. I would pretty much put you back towards the bottom of this blue zone, which is very historical as well. So that's just some like longer term speculative stuff. Short term, all that really matters is how you react to this 3.5% level. Then moving on to crude oil. You are pretty much retesting 76.69 as resistance. It was support here last September. You've got a little bit of hidden bearish divergence. You had a little bear flag and rejection of this wedge breakout play out at the same time. And now you're simply retesting a previous resistance and support as resistance because you are under it. So that's what's going on with crude oil. Let's take a quick look at energy. Seems like you were in this little consolidation area over here. If we just look at this as a range, you kind of are testing the breakout and now back testing the breakout of that little range. But you could also, and I did show this on the stream last week, look at this as a little potential bull flag for energy. And if we really zoom out, it's kind of got like that cup and handle look to it as well. So not too bad. Moving on to metals. Gold is retesting 1876 resistance from November of 2021, June of 2022, January of 2021. It was support at the end of 2020. This is a very big level. It actually broke this rising wedge to the upside, which is something I did talk about recently. And if we really zoom out here on the weekly, I think just holding above 1800 is very key. That was 2012 major resistance. You actually used it as resistance back in August of last year. Now you're back above it. So if you can hold above that, these are kind of like your next major levels on the weekly chart for gold. Let's move over to silver. On the weekly, this looks like one big, I don't even know if I would call it a bull flag. It's too large for a bull flag. Just one big downsloping channel, which is currently testing the breakout. I think the big level here is around 21 from this high in 08 and some highs in 2016. And if it breaks that, like your next major resistance zone, it's pretty much 26 to 28 from these lows and these highs. So big shift for metals lately. They're starting to kind of outperform equities, at least short term. We will see whether or not that continues. You know, if we really go down to the daily, then you are kind of testing a rising wedge breakdown. You're actually retesting it. So we will see how that plays out. Let's take a look at the dollar. Had a little move after this wedge breakout, pretty much tapped resistance back from over here and is now selling off again, putting in some new lows and breaking under the 103.8 support. So the next support I have for the dollar is around 101.34 from this low over here back in May of last year. And then finally, this one is, it's really beautiful, honestly. It broke out of the 200-day moving average, the Hang Seng Index just going straight up after that breakout. It's just pretty much like you broke this level, you went up to the 200-day moving average, you broke that level, and now it's heading up to the next level around 22.3K. Very, very good price action there. A lot of Chinese stocks are enjoying that move. One stock I did share on the premium watch list this weekend was BIDU, and this one is testing a downsloping channel breakout. It's been in this pattern since June of 2021. It's actually testing a breakout of that. You even had like a little scuffed inverse head and shoulders in here as well, trying to get above the 200-day moving average. This is the first time it's really doing this. You know, of course there were some fake outs over here, but if it can hold, this is the first time it's going to be doing this since, like, again, June of 2021. So even as in Chinese stocks are getting this shift, you're seeing across all the markets right now, we're getting a shift. The dollar going lower, US 10-year going lower, Chinese stocks going up, crypto starting to head up a little bit. We're kind of phasing back towards a nicer environment for stocks. Now, we have had a couple good days in the market. Let's talk about whether or not that can continue, but you want to keep all this in mind first. Other markets are giving us, I don't know if I would say green lights yet, but at least yellow lights. I guess, well, I don't know. If I'm going to use that analogy, you kind of go from like green to yellow to red. So let's just imagine it's like the opposite. Like you're getting some signals, but you're not all the way there yet. We do have some big stuff coming up this week. Let's go over to the Discord really quickly and head over to announcements. And tomorrow is Tuesday. Powell will be speaking right before the open. And then on Thursday, we have CPI. On the Trading Addicts podcast, we did talk about inflation at the start of it. You can go check out what I said about inflation over there. But let's take a look at the charts right now. All right, so you see the title of the stream. This is why tomorrow is critical for the stock market from a technical standpoint. If we go back to my last stream, we were actually testing a breakdown. We were testing a breakdown of this little triangle pattern over here, bearish pennant, whatever you wanted to call it. We were testing a breakdown of that. We never confirmed the breakdown. We actually confirmed a breakout. We broke that to the upside. And if you watched that last stream, basically what I said was, this scenario is bullish to me. This scenario is bullish to me. All right, we're kind of leaning, at least for right now, towards this scenario. All right, the only bearish scenario here to me is this, breaking under our major support zone from the last couple of years. That would be the bearish scenario. But there were two different bullish scenarios, and we are kind of going towards this one, which honestly was less likely to me because we were just testing a breakdown and we never really got a parallel right shoulder. But again, it's still possible to get an inverse head and shoulders like this. Okay, so this is a good start. If you were able to retest that wedge supply line, that broadening wedge we've been in since the top of the bull market, which started the bear market, I think you could break it, all right? Because we've rejected it now 1, 2, 3, 4, almost 5 times. And now we're going to be retesting it. If we get up there with a higher low, also you have hidden bullish divergence as of today confirmed on the MACD for the SPY. These are, again, good signals. Things are starting to shift. I put out a tweet today. I forgot exactly what I said. Let me see it. Is swing season back? If so, then I'm back. This was a tweet I put out. These are the variables I like to see when I put out swing trades. All right, as a swing trader, which is what I prefer to do, it's just not really, it really wasn't that possible last year for the most part, even though we did manage to get some nice ones. It was possible, it was much tougher. As a swing trader, we're starting to see the market environment that makes it a lot, I wouldn't even say easier to swing trade, but more doable to swing trade in the first place. But tomorrow is critical. Why? Because today we had a good start, we were continuing higher, but we ended up closing the day pretty much across the board with shooting star candles. All right, those are bearish candles, and it's not the way I would have liked the market to close on the daily, but it's not a huge deal if we can do one thing. It's not a huge deal if on lower time frames tomorrow we can flip our previous resistances into support. I see Anna in the chat right now. You were mentioning this earlier in the Discord. If we can flip that resistance we had in that range, which was like so boring and dry for weeks, if we can actually flip that into a support tomorrow, maybe even get some hidden bullish divergence on lower time frames, get a bull flag, 382, 50% retrace Fibonacci pullback, that would actually be even healthier than going straight up after that breakout, right? Because we were going straight up after this breakout for a little bit. But actually back testing and flipping that resistance into a support is something I would prefer a lot more than just doing this, because then you would probably knife down at some point, which maybe you kind of are, but it's not too extreme. I think it was like a 1.5% pullback off the top. Yeah, pretty much. Like, so far it's actually kind of healthy. But you just want to make sure that you're able to hold that zone tomorrow, and not only do that, but then get back up, because you technically also did reject a previous support from the end of November, beginning of December. You flipped that previous support into a resistance. So really what you're looking for on lower time frames is a pretty much back to that previous resistance, and then move above to break above today's high of day. That is what would set you up with a very healthy move, potentially on higher time frames, towards this overall long-term wedge breakout. So on the daily, that would look something like this. A little back test here, break above this high over here, and then we are in breakout test area. All right, could take some time, but tomorrow is going to be the first test of that. So it's critical to watch futures overnight. Whatever Powell says tomorrow can affect the market. Obviously CPI, which is 2 days, 3 days from now, can affect that, but we're gonna talk about that when we get closer to that. But that is what I'm watching right now on the stock market. If you fail to hold above that previous resistance from the last 2 weeks, you break back under it, then you might have just had like a little short-term move after a breakout. And then if we really zoom out and redraw these things, like if you can't hold that, that's when this actually starts to turn back into a little bit of a bear flag look. So to prevent this from happening, what you would want to see is a scenario that I just presented to all of you on the stream. All right. So those are my thoughts on the SPY. Let's move over to the Qs. Same thing, not a really good looking candle today, a little bit of a shooting star, but confirmed hidden bullish divergence. And you're still above, you are still above for right now, the consolidation range we were in for a couple of weeks. So it still could just be looked at as a back test of a breakout to the upside. All right. But it comes down to tomorrow. I don't know how the price action is going to look tomorrow. Maybe we just go sideways at that level, but it could take a day, it could take 2 days. So however long it takes, like that's the test that you're pretty much watching right now. And again, this is what could prevent a very, very ugly inverted cup and handle on the QQQ from confirming. All right. Bouncing here and moving away from this level is what can prevent this massive inverted cup and handle, which could send a lot of large cap stocks to COVID crash levels from happening. So this is really what you want to see happen. This is the scenario. I'm showing you the optimal scenario. I don't know if it will happen, but we will see. Okay. So a very similar thing for the Qs on low time frames. You just want to flip this little previous resistance into a support. You didn't really fill the gap on the Qs from the gap up today. The SPY did, however, over here, as you can see. So very critical areas. Let's move over into small caps. Same thing here, pretty much. You know, you do not want this to start looking more and more like a bear flag. So what you want to do is flip this little previous resistance into a support and then just run higher. And then hopefully break above the 200-day moving average, break above 188. It's not going to be easy. There's a few different things. There's a few different steps you're going to need. You're going to need to get past FOMC, well, not FOMC, Powell speaking tomorrow and CPI on Thursday. So we're not good to go yet, but that's like the scenario that I'm hoping happens. If you go over to the ARK ETF, it is also now going to be entering a very big test. It broke down from this pretty much final support zone it had, and now it is retesting it. So what you do not want to see here is your support flipped into a resistance and then a rejection of that breakout. What you do want to see here is a spring back above the support and then a breakout of that downsloping channel. So we are entering an area where the market overall has the potential to break out, but the next few days of price action are crucial. It is going to be that test. And if we can't do it, then you're going to be getting bear flags on the SPY and the QQQ, and for the QQQ specifically, a bear flag at the neckline of an inverted cup and handle. And if you can't do it on the ARK ETF for growth stocks, you're flipping your support that you actually held during the COVID crash into a resistance. The lows of our COVID crash is now our highs in our current market. That's the point that we are at. The lowest point of the crash we saw in 2020 is our highest point of price action until we break above it. That is a very, very big flip you do not want to keep for more than a couple of weeks. Because the longer you stay under that level, the harder it will be to get back above it, the more volume you will need, maybe the more news you will need. And if it takes enough time, maybe you're going to need also good earnings as well, because we don't know how earnings are going to affect all of this for Q4 of last year. So those are my thoughts on the market right now. The volatility index is still just kind of consolidating, not giving us much of a signal. You could look at this as like a little bit of a triangle, like that. You could look at it as a little bit of a bear flag like that. Really, I'm just going to keep an eye on the levels. I think breaking under 19 would be great for the stock market, and breaking above this 200-day moving average, which you have not done since you broke under in November, would be bad for the stock market. All right, so those are the indices. Let's move into the swings really quickly, just an update on them. Meta is in profit since I alerted it. It's up 5%. Again, not a great looking candle on the daily. Kind of a shooting star. If it closed a little bit lower, it also would have been a bearish engulfing candle, but didn't get that in a textbook way. Really at this point, it's still possible to backtest, to try and flip this previous trend line or supply line into a support, and at the same time flip this resistance back into a support and hold this low, and then that also lines up with lows from 2018. It's still possible to backtest. You just want to make sure you don't break under that level and or break under this trend line, which some people might be looking at as like a larger bear flag for me. So yeah, hopefully you can remain above that level. There's pretty much going to be no break even on this one. The break even rule I use for my swings on the sheet is if it goes up 10% and falls back down to the entry, I mark it a break even. But if this goes up 10%, that's pretty much your first target, so I'll be marking it green. So that's really what that swing is going to come down to. Fisker was up 4% today. Nice day. And if you remember on one of my, I think it was my last stream, I talked about this. Look at that. This is why you watch the streams, okay? You had the little inverse head and shoulders, the falling wedge. You were making higher lows above your lows from last year, and boom, you got the wedge breakout today. This falling wedge is like a month and a half old. Yeah, it's a 1 hour time frame, but it's 1.5 months of price action that you just broke out of. So this is the other thing, like in terms of why you really want the market to flip that resistance into a support. A lot of stocks, a lot of individual names are setting up like this. They already had their breakouts today on the 1 hour, and now maybe with a small pullback, you're going to flip those previous levels of resistance into a support, which is why it is critical, title of the stream, to hold above those levels I just mentioned on the indices. So we will see. But good start for Fisker. That's all it is for right now, a start. We will see if it can keep going. Hopefully it does. Moving on to the next swing, Google, still around where I alerted it, but it did actually create a hammer candle off the retest of the pattern completion zone of this bullish shark on Friday. Again, in the morning, you did see some fall through price action, closed a little bit higher, about 1% higher. Also got a MACD crossover to green. As long as you can continue to hold above those lows, it is okay for right now. And then for the last swing, that is public, Amazon, up about 3% since the alert. Nice bullish bullish engulfing candle from Friday. Again, a retest of the pattern completion zone of this bullish butterfly. It's always better to have not one but two lows at your pattern completion zones of harmonics. And then on top of that, you had the edge on the oscillators with the classic bullish divergence. So your setup was good going into today. You even had the price action that your setup was implying this morning. You just lost gains in the afternoon, and now it's pretty much going to be giving us a retest to keep an eye out on. So those are the swings. If you want swings on top of that, I just named 4. There's a lot more that are in premium as well. The sign up for premium is the first link in the description. All of these ones that you cannot see are in premium. So I just showed you the 4 that are not in premium. The rest of them are in premium. If you want additional ones, that's in the description. Now let's move on to some other names. First of all, CLOV. Very nice day, up 10%, and it is back above $1. We talked about this really large volume on January 5th last Thursday, which I think was your highest volume since June of last year. And then you actually, on lower volume, regained that same level on Friday, around $1, and then today you broke above it. It was like a 3-day resistance. You broke above it, went like another 10% higher today. Now it's your support. $1 is your support on CLOV. Your next resistance is 121. So good start. This honestly is a little bit more of an uptrend compared to these like 3 or 4 days that you usually get. So this is a little bit different than the other rallies CLOV has seen pretty much since its top in earnings last August. A little bit of a change there, not too bad. Lucid was up 7% today. Those names are in the thumbnail of the stream. It's fun. It's fun to see these types of names. They remind me of 2021 actually having pretty good days, despite the SPY closing red technically. But yeah, Lucid, I think this was also on the watch list for premium members over the weekend. It had like a smaller falling wedge. I might have even charted this on the stream. Had a larger downsloping channel, a smaller falling wedge. So while it's breaking out of the smaller falling wedge, it's actually getting a bounce off the downsloping channel demand line. If you really zoom in here, you also got a little bit of a double bottom around $6. So that is Lucid, GameStop, bullish engulfing candle last Friday around this 111 support. It's been a little bit above, beneath that support level. I thought that the next one was 91. It kind of went down to like 102. Well, I still think the next one is 91 if that breaks, but kind of just reversed in the middle of nowhere, at least for my levels on higher time frames. Got back above 111, and now we'll see if it can hold it or not. Your MACD is now back to green for the first time since December 12th. Volume is still pretty good. And I guess if you look at this as like a downsloping channel, you are testing a breakout of it. So short term, good. Longer term, I think it still needs more price action to get a little bit of a clearer signal. However, on the weekly time frame, you are starting to get a reaction at the pattern completion zone of this bullish cipher that started during the COVID crash. You also have potential classic bullish divergence. The RSI on the weekly got to the lowest level of all time for Tesla. And on top of that, you got a bullish hammer candle or a bullish pin bar candle to end last week. So there actually is an edge on the weekly time frame for Tesla. And now you also have a little bit of a small double bottom and channel breakout on the daily time frame. So a couple weeks ago, I was saying I still think Tesla's a falling knife. There's not enough of data here for a good bias, but my bias is actually now kind of flipping back to bullish. As long as you hold above this low you put in last Friday morning. If you don't, the 91 is kind of your next level. So there is Tesla. AMD was up 5% today. It is very quietly testing a breakout of this wedge. It's been in since literally its all-time highs about a year and a month ago. So AMD is testing a breakout of this wedge. If it can break out of it, your next level is pretty much a low 70s, which was resistance back over here in 2020 and 2021. Also a potential higher low double bottom with hidden bullish divergence and a bullish hammer candle from last Friday. So again, when we put together crypto, the other markets, the stock market hopefully holding this back test, and how a lot of the technicals on these individual names are looking right now, from a technical standpoint, you're getting a flip back to bullish. But you need to hold those 2 days of gains, kind of not even including this afternoon, and flip your last 2 weeks of resistance into a support or continuation. So it's not an easy job, but it is a start. I'll continue to update on how that kind of progresses throughout the week. And those are my thoughts on the market and some individual names right now. And that's pretty much going to be it. I just want to do a quick stream tonight, an early stream, to get a lot of these charts across to all of you. So yeah, thank you for watching the stream. Hit the like button, hit the subscribe button. And again, if you do not see it yet, hopefully we can get to like 1,000 views before we release the next one. We're sitting at around 800 right now. Maybe even get to 300 subs. Trading Addicts podcast. Go watch it, an hour and a half long. You didn't see it, I just dropped the link to that in the chat. Go drop a like, let us know what you thought in the comments of that. Go follow us on the socials for Trading Addicts podcast. I am very, very excited about this. You know, I start like a lot of different things, but I don't think a lot of you have heard me talk that much about like one thing in a long time. So I'm really excited for this one. I tried my best. Hopefully I keep getting better every episode. Let me know how I did as well. I got some really nice feedback on Twitter and in the Discord. I really do appreciate it. So go check that out. If you're not in the Discord, the link for that's in the description. It's free to join. If you want to pay for premium, that link is also in the description. My free course is there. And that's going to do it for tonight's stream. Thank you for watching the stream, and peace out.
I'm resigning my position here at once. I've got to get away. Nora, all I understand is it's better to be hurt a little bit now than a lot later on.